Okay, let's talk about the purpose of this spreadsheet. So what we're trying to do is determine, as an owner, what kind of a system can we set up so it allows me to get paid on a regular basis, some regular amount if possible. And so this is our approach initially for a fairly simplified business to manage their distributions to their owners. So this is designed primarily for a single member LLC, possibly a partnership, or just somebody, a sole proprietorship. So something fairly simple. You know what your cash flow looks like as far as kind of the ins and outs of the operational side of it. And so this is very specific to how do we manage cash? How do I get paid, basically? And that's a big question we get often. All right, so real quick, you'll see this is set up kind of quarter by quarter and then month by month at the top here. It's kind of color coded, so it kind of tells you what quarter you're in, where you should have some actual results in here. And so this is kind of broken out month by month. It has total at the far end here, you'll see, and got some formulas built into this that we'll talk about in more detail shortly. So the idea is as you have actual results, you'll start with your net income and you're going to plug in your actual results here, but you may start with some estimates, and we'll kind of go through that in our example here. We'll also have some things that reduce cash. So you have your net income, what's going to reduce cash, maybe some principal payments for notes, your federal and state taxes, your estimated payments that you should be making. Are you trying to retain any cash? That's something that we would kind of take out of the equation that we might want to budget for, in a sense. We could use this to kind of help us manage that. And then we get into your distribution, your draw, maybe what you want to call your salary. Since you're a sole member LLC, even a partnership and or sole proprietor, you're not going to be getting paid through your payroll system. You're going to have to find some kind of a system to use on your own to determine how much cash and what frequency you're going to pull from the business. All right, so we have a couple of options here for distributions, and if you want to add retirement portions, you can do that as well. Okay, and then we're going to get into, here's the section here, based on what we put into the federal and state income tax amounts up above. It's going to populate a little section here that kind of gives us a sense of what's our obligation over those 3 months, let's say the first 3 months of the year, and then what is the payment that we're going to make based off of that. This pretty assumes that you're going to, whatever you accrue in an obligation for federal estimates, you're going to populate that amount here in your federal estimated payments. So we'll get into that with federal and state estimated payments shortly. And then let's click on this here, and we'll see if you're trying to retain cash, or if you're trying to build some form of cash. We recommend that you have 3 to 6 months of cash in reserves. So that's a difficult thing for most small businesses to do. So having a plan to get to it little by little is really important. So this is kind of a tool that we can use for that purpose as well. And then if I minimize these for a second, then we have a section down here for end of month total cash balance and AR that's expected, if that applies to your business. So we'll talk about this again in further detail, but what we're going to do is plug in the amount of cash that we have at the end of the month once your financials are done for each month, because what we want to know from this balance that ends up here is what portion of that might be available for operational purposes, how much of that cash should be reserved for income taxes, and how much of that might be cash reserves. Okay, and then you'll have your total cash balance. This total cash balance will equal what your lump sum amount up here is. So, and we'll get into that in some more detail. And then the very last section that we're going to look at is your personal cash in and out. So based on what you have available to pull from the business on a monthly basis, we're going to keep track of what you have, what you may be entitled to, let's use that word, what you actually pull out, what that balance is for the month, and actually what that balance is, whether it's a positive or a negative, and then it'll show you the monthly increase or decrease. And every month, this total here will continue to grow or decrease based on last month plus the current month's activity. All right, we're going to get into the demonstration of that here real quick. All right, so let's start at the beginning here. So the first thing we're going to do is, when you get this, You may, depending on when you get this during your fiscal year, part of your quarters are going to already be filled. So you're going to just plug in the first month of the year that you're going to be doing the forecast for, if you will, a projection for your cash flow. So in this case, I started January 2025. It automatically populates the rest of the year out here. And based on where we're at during the year, so you can see we're actually in the month of June right now. And so first and second quarters are highlighted for actual results. So we're expected to put our actual results of net income in these 6 cells. All right, so we haven't finished June. We're not going to do that yet, but let's just say you get this and it's at the very beginning of the year. Maybe it's the end of December and you're getting ready for next year. What you're going to do is you're going to put in your estimated amounts that you think you're going to have on net income. How are you going to do that? Depends on a few things. If you just got started, you will have to just make some guesstimates. If you have been in business for a couple of years and you kind of have, the seasonality, you know somewhat what your net income is, that it changes or that it's pretty static, then you can just plug in those amounts. What I would suggest is you look at your profit and loss statements for the last year or two to kind of come up with what those amounts ought to be. So let's just say, for the sake of argument, we're going to do $7,500 is the net income that you're going to get on your business every month. So I'm just going to copy that across. You'll have the ability to do that here. All right, and you'll see that we have a total column out here, total column, and it says 90,000. All right, so that's going to be our base point. And then we're going to say, okay, do we have any notes? Well, where do you find that information? Notes are you going to find the principal payment you can find on your balance sheet, or should be able to see that on your balance sheet for the end of the month. How much principal have you paid on any note payments that you've had? This is important because that portion of cash isn't going to show up on your net income at all in your income statement or your profit and loss statement. The interest will, however, the principal payment won't. So, and usually those are big chunks of money, so we want to make sure we get that captured on here if possible. So let's just say you have 2 options. You can either put a percentage of the net income if it's static. So you could do 5%. And it'll automatically populate. Now, most of us, that's not going to be the case, so I'll probably just leave this blank, and I will go ahead and just override these formulas and say, okay, I've got a $250 worth of principal payments coming out on a note, a line of credit, let's say, and I'll just take that off the top. Okay, and then I'll come down and say, okay, here's where this is an important piece to me. I think that gets missed a lot, especially with young businesses. Is, are we taking into consideration our obligations for federal and state income tax? And if we have some income coming in, it's not hard to get, especially in a growing business where cash is kind of being used up in advance in building and generating new revenue. You sometimes miss the fact that you're building up an obligation on your federal and state taxes, which are required to be paid on a quarterly basis. All right, so let's just say that what I would suggest you do is start with maybe 25 and 5%. You can actually go to your tax return, look at it, compare your income from your business, what those taxes were from the business last year, and you should be able to kind of figure out what is that percentage you ought to use for your federal and state income tax. Obviously, if you don't have a state where you pay state income tax, put 0 in here and you kind of move on. But it's going to calculate what your obligation is based on your net income. Okay, so if I click on this, you'll see it's taking that net income amount and multiplying it by that 25% and doing that as a negative for us. Okay, so we're going to keep on going down, and then you're going to say, okay, do I want to retain any cash in the business? Let's just argue, for the sake of argument, you don't have any excess cash in your business and you want to start growing it. Let's just put 5% here. Okay, and so what it's doing is, you'll notice that this 5% is different than the 5% above. Well, what we're doing is we're actually taking 5% of the remaining cash. So if I double click this, you'll see it's taking the net income less federal and state income taxes, and then multiplying that by 5%. So it's trying to use up the net amount that you have available to you. All right, and so then that takes you to the next piece, which is how much. Let's see here, 2152. Okay, there we go. So what this is doing is saying, okay, so what I was looking at was the operational cash. So you know the operational cash is still showing $5,000, even though we have about 2,762.50 in deductions. Well, the reality is the cash retention is not really a reduction. We're just going to hold it back. You're going to keep it in your business, and we're going to see that in the section below. So right now you still have $5,000 available to be used. All right. So recommendation for distributions normally is if you're not sure about how much cash you have available to you, you're a very new business, you don't know what your income is going to look like, you need to start with a lower percentage. It's just a wiser move, because you just don't know what you don't know at this point. If you have a loss, that's going to be a problem if you're pulling cash out, because you're losing money from your business and you're also pulling some out for yourself individually. So let's just use 50% in this case. All right. So based on that, this is telling me I still have $1,250 in some form of operational cash in here. So we're still ahead. We've still built up cash at this point of $1,250. All right. And let's just say you're going to do 5%. It's going to be used for retirements. Okay. So at this point, you have $875 of additional cash that's coming into the business. All right, so now let's take a look at what's happened in these income tax section. All right. So federal estimate actual is $1,875 for the month of January, and that's because of the federal income tax calculation here, which is 25% of $7,500. All right, so it's accruing an amount for federal taxes. It's doing the same for state taxes, $375. All right. And if we look at the section a little bit deeper, since we use $7,500 across, these amounts are going to be the same. You'll see that we are assuming you're going to pay $7,500 when it comes time to pay your taxes. Now, this actually is not quite right. We'll get this fixed here real quick. There we go. So really what you're going to do is the middle of April, you're going to pay through March. And then you're going to look at, and then, okay, so we had a little correction to make here. So what's going to happen is we've got this, assuming that you're going to pay your first quarterly installment on April 15th for the first 3 months. And then have a June 15th estimate due date, which is interesting by the government. Why it's not 7/15 is interesting. So what we typically do is we're going to say, okay, that's a short quarter. If we have to pay that in the middle of the quarter, I have no idea what my actual obligation is going to be for June. So this is usually my smaller quarter. Now you can do it differently, where you say, okay, let's collect all of this, and instead of paying $37.50, you could be paying $56.25. That's your option. That's just not how I have this set up. So then we look at that third quarter. It should just be, in my case, it's going to be June, July, and August. And then my last payment in the year is going to be for the last 4 months of the year, the $7,500. But you'll see at the end of this, I have my total obligation for federal income tax. I've got the amount that's been paid, which zeroes out, and that's kind of our goal as we move forward. Okay, and with the corrections that are made here, we see that our state tax is also zeroed out. Okay, now again, you can change any of these numbers. Nothing is locked down, so just be aware that how this is set up currently, that there are some formulas in here, and once you change them, you have to put them back in yourself on that. But that's the idea. We want to keep track of what our federal and state tax obligations are, and you need to have some kind of a system just to kind of keep track of that, and also monitor when you paid it. All right, so that's that section, and you're going to see these amounts here are going to flow down into this NCB income tax. And what that's going to be is our net cash balance that's set aside for income tax purposes. So you'll see $2,250 here for income taxes, which is the sum of $1,875 and $375 for the month. And you'll see that build. And then you'll see in the month that you actually make the income tax payments, then that portion that's assignable to income taxes that's reduced. You paid off your obligation for January, February, March, and you have the obligation remaining of April, and that's it. And so that process kind of goes back and forth. So this balance here of your cash that's attributable to those taxes, it stays pretty fluid. It grows usually on a quarterly basis and decreases as well on a quarterly basis. So there's kind of an ebb and flow to it. But you need to know what that is so that you don't overspend that. All right, so that's this section, federal and state estimated taxes, and then how it affects the overall cash. Let's come back up here and look at this next section, which is going to be cash retention. And so cash retention is taking this cash up at the top that we were trying to build, and perhaps you already have a cash reserve balance of maybe it's $1,000. Okay, so you're starting with 1,000. You'll see that the cash reserve balance is now $1,262.50 because you added $262.50 to it. And if you go all the way across, you'll see that at some point you might eventually have up to $4,150 set aside as cash reserves. All right. Now, cash reserves are meant to be reserved for something. It may be reserved for emergencies, or it may be reserved for some other things that you have, some maybe major purchases that you have to make. So there's a section, a row here for manual changes. So you might need to come in, let's say in July, and you need to buy a computer, significant computer. You're going to take $2,500 out of that. All right, so that's going to reduce your available cash reserve balance to $337.50. All right, so if I go out here, I might have $1,650 left over at the end of the year. Okay, so let's go ahead and zero that back out for now. The idea is you're trying to build your cash, trying to build reserves for emergency purposes. Again, you're going to use it from time to time, and that's what this row is for, row 28 here. But by and large, you're trying to build your cash. Okay, so let's get past that. Actually, let's not. Here's the amount, $1,262.50. And so of the amount that we're going to put for end of month total cash balance here, let's say you have $15,000 in cash. And let's say, where do you get that? Where do you get that number? So you're going to go to your balance sheet. You're going to look at your total cash at the end of the month once you know that your bank accounts have been reconciled. And you're going to plug in this amount. If you have any end of month AR, you can put that in here. Kind of good to know what that is, but it actually doesn't really doesn't even need to be in here. I just like to have it to tell me kind of what's my expected cash going to look like over the next 30 days. So I might have, $25,000 of AR. So to me, I call that my expected cash reserves for this next month. It kind of helps me understand what's happening with cash. But we're really focused on the $15,000. So of the $15,000 in cash, we're going to say that it's going to automatically calculate what your operating cash looks like. So of the $15,000, it's showing that we have $11,500 roughly of operating cash. You have $2,250 that needs to be set aside for income taxes, and cash reserves is $1,262.50. You still have your total cash. These two numbers still agree. It's just this is giving you a sense of what do you actually have available for operation purposes, which is really, really helpful. Okay. All right. So moving further down, we get to the fun part is your personal cash in and out. So depending on how well your business is running, this could be fun or it could not be. So the personal cash in is $47.37.50. All right. Where did it come up with that? Well, let's double click on this and it'll give us the information. So basically it's taking net income, subtracting out any principal payments that you're making here, federal income tax, state income tax, and your cash retention. The distributions are going to you and it's going to come out as your cash out. So what it's saying is of all this activity up above, you are actually entitled to, let's use that word again, $47.37.50, but you only pulled out $41.25. All right, so you left a buffer of $612.50. So that $612.50, where is it? Well, you could argue it's in your reserves, but it's actually sitting in your operations. So you're providing, let's just use the term a loan back to the business of your cash that you're entitled to at $612.50. From a real world perspective is you're allowing the business to continue to use those funds to help build a more successful future for your business. So you may eventually pull that money, and I would recommend you pull a good chunk of that at some point, but I always recommend we try to do that either at the very least annual basis. That's my recommendation, especially early on, or as you get to know your business better and your cash flow is more it's easier to manage, or it's more automatic, static. That's the word I want to use. It's more static. Then you'll know kind of what you can pull out. You can actually do it on a quarterly basis. But I would recommend, this isn't bad, 612. That's about 12% of what you had coming to you. So, if it's earlier, I might say, hey, let's do a little bit less here on the distributions, but this looks pretty good. Again, if it's static, this is going to work out real well. So let's kind of play this out a little further. End of month cash, let's say, that's 18,000, 21,000, 22,000. We're just plugging in random numbers here. So this is all going to come from your balance sheet cash once it's been reconciled for each month. Okay. And then I would recommend you don't even plug this in when you're doing the estimates. Just leave that alone. And then let's just say the AR always stays the same. Okay. So here you can kind of see, this is how your operational cash has been flowing. You'll see your income taxes. You've had plenty of cash for income taxes. You haven't gone negative in anything. So let's say the opposite's true and we go 15,000, 12,000, 10,000, 9,000. Okay, so we're still okay. You'll see you've had a reduction of your operating cash from 11,487.50 to 41.75. So what this will tell you is you kind of need to keep cash. If you look at your biggest month, which is probably about here, you need about 10,000 in cash, 9,000 in cash, generally speaking, to keep some kind of operational balance. So that could be good enough depending on how cash moves in and out of your business, which is a different discussion. But ideally, what you want to see, especially with the cash reserves going, you do want to see this overall cash balance increase. That's important for you to see. Now, if that's true, even in this situation, halfway through the year, let's see where we're at in terms of our personal cash in and out. So see that every month we've increased cash by $612.50 for you. So your total balance of the business that you could conceivably distribute to yourself is $30,675 through the end of June. And if this played out the rest of the year, and as long as our cash allowed for it, we didn't have any strange, cash outs that, losses, things like that. Ideally, you might be able to pay yourself a maximum of $7,350 at the end of the year without really theoretically hurting your business. So what I'll typically do is I'll look at that and make a determination. I still won't pull all of that cash out. I'll probably pull, in January, I would pull, a certain percentage. A big percentage might go to me, but I might have some goals for the business that I want to recontribute some additional cash on top of my cash reserves for that purpose for the next year. So maybe I do 50% of that to me, or maybe 75% to me, 25% to the business. It could be, 50-50. It could be anything. But you could conceivably put the full $7,350 in as a distribution in January to kind of settle up for this year. Okay. So this gives you kind of the best of a variety of things. It just kind of gives you a barometer of how are you doing on your net income. If you have estimated goals here and you're seeing that your actual results are less or more, that's good information to have. You can also tell that in your profit and loss as well. Having these income tax estimates in here is critical. You're trying to figure out how much do I get paid. You need to make sure that the government gets their share and they get it when they're supposed to get it. That's important. You want to build some cash. I think that's an important goal, but you can change that. If you're not ready to do that yet, you don't have to do that. You can take that off. And distributions, you have the ability to change this. You could put nothing as a zero here, or you can do 50%. And you know that the first month you had to do more. You can actually override that, put that amount in, and you can see, what the result of that is going to be. So you're kind of upside down. Starting off, but if you know that you're going to have some higher months in terms of your net income coming that you're assured of, then that's probably not going to be a big deal. But you can make that work. So there's a lot of flexibility built into this. And again, the operational cash, this is what you're actually putting back into the business in the short run. and I think this is going to match, and it does. It matches your personal increase. So basically, again, you're contributing more money into the business above and beyond what you might be putting in for cash retention. All right. And then again, this is automatically calculated for you. It's telling you how much cash is coming in. At this point, there isn't any based on our 0% for cash retention. Start off with $1,000. It's going to still stay in there unless you happen to use it. All right. And then again, this section, this is going to be based on what is your cash balance at the end of each month after it's been reconciled. Plus, if you want to continue to put anything on your AR, expected AR, then go ahead and plug that in. Again, you don't have to put anything in there. It doesn't really serve a purpose when it comes to actually determining what is the breakout of your cash. Again, this section is how much of my cash is available for operations. You don't want that to be negative. Okay. Income taxes, you want to make sure that you understand how much cash you have that's needs to be paid to the IRS or to the state. It belongs to them. And then finally, if you have some cash reserves that you're trying to build up, this gives you a great way to segment that so that you can see your progress as it relates to that. All right, and then lastly, your personal cash in and out gives you that goal of how much do I get paid, when do I get paid, how am I doing, have I paid myself enough, have I not paid myself enough. This will give you the answers that you need in terms of that. Should you have any questions on this, you can always get a hold of me at cunderwood@ucentric.biz. Check it out on the website. You'll be able to find me. Check me out on LinkedIn. You should be able to get a hold of me there too. If you have any questions on that, don't hesitate to ask.